With your guys' construction of the portfolios, like you said, you use ETFs, and some people that may be watching may not be as familiar with ETFs. They may see a grouping of stocks. They may have dealt with mutual funds. I mean, you were at the ETF conference, so you've seen over the years how much ETFs have grown in their popularity. Talk to me about the benefits there of you constructing these portfolios with ETFs. I know the cost benefits, but if you can talk a little bit about that and why you use ETFs, that would be great.
Yeah, I think the investor education of ETFs have come a long way. The market for U.S. ETFs, not worldwide, but just look at the U.S., has grown to just over $3 trillion from like $100 billion 18 years ago. So it's been phenomenal. And really what ETFs are is it's a delivery vehicle. It's not a newfangled investment or anything that hasn't been tested by the market and so forth. What it basically does is it says we're going to take a group of securities, stocks, bonds, and put it together in a cost-effective, tax-efficient vehicle and have it trade intraday. And what ETFs have brought to the marketplace is not only this more efficient delivery of that basket of securities versus, say, a mutual fund, but it also brings more transparency. Investors truly know what they are investing in with an ETF because it's priced intraday. Holdings are seen every day and so forth. And a lot of ETFs are constructed using rules. Whether it's a plain vanilla index like the S&P 500 or something that focuses on, say, smaller cap stocks or value stocks. But those ETFs are being determined by the rules that are embedded in the prospectus that define the benchmark that they're tracking. So it just brings, these vehicles aren't bringing anything really new to the market except a more efficient way of delivering exposures or participation in the market that had been traditionally delivered by, say, a mutual fund or a closed-end fund.
And the cost, the cost is definitely a benefit too. Would you say that? I mean, right now you can access some ETFs at a very low cost basis.
It depends on the ETF that you're looking at. So U.S. listed ETFs that focus on U.S. equities and so forth, probably some of the cheapest that you'll see in the universe. Once you go outside the U.S. into the international marketplace, into international small cap or even emerging markets, the cost tends to go up. And that's partly that there's a structural cost component to that, meaning that it's just more expensive to get exposure to overseas markets versus, say, the U.S. There's also liquidity issues and so forth. But certainly relative to what the kind of exposure that you would get in a traditional mutual fund, as well as the greater tax efficiencies that come with the ETF wrapper, you are getting the exposure to the market in a sort of more cost-effective way than you would through a traditional mutual fund.